All right, in this video, I wanted to cover the potential U.S. federal income taxes you might incur when you buy and sell NFTs, or you are an artist that creates NFTs and then sells them online to other buyers. So just some of the background here. NFTs, for those of you who don't know, this stands for non-fungible token. It's basically a digital asset that's traded on the Ethereum blockchain, which means that if you go to these websites that sell NFTs, you need to purchase the NFT using Ether. So you need ETH to be able to buy it. And then again, the Ethereum blockchain validates the unique identity of the NFT itself, right? So NFTs are unique in that they can't be replicated, right? They can't be replicated or replaced with something else, and this is because the blockchain verifies that this is the original production. So it's very similar to an original piece of artwork that you can kind of tangibly hold. This replicates that, but it's not, it's digital. Okay, so what are some of the basic U.S. tax principles here? So I want to cover U.S. taxes for the creators, and then what kind of taxes might be imposed for those who trade these things, so buy and sell them. So taxes for the creators. Well, if you create an NFT and then sell it, generally you're going to be considered to be engaged in a trader business of creating and selling NFTs. Now, the reason why that's important is because when you are engaged in the trader business of creating and selling something, whether it's inventoriable product, you're providing a service, or in this case creating and selling NFTs, all of the income that you generate from the project, so the gross proceeds, are going to be ordinary income subject to ordinary federal income taxes. If you're doing this individually, you're also going to be subject to the self-employment taxes, okay? So the creator of an NFT that eventually sells it, they're going to report the gross proceeds from the sale on a Schedule C of their Form 1040. Okay, so Schedule C income or loss, that's subject to federal income taxes and federal self-employment taxes. Now, the nice thing about if you're considered engaged in trader business is you can deduct expenses under Section 162 that are, quote, ordinary and necessary in connection with that trader business. So, if you're buying, let's see, like Adobe Photoshop software or video editing software, or if you have to hire somebody to edit some software, edit the NFT project for you, these are all costs that are incurred with your trader business. So they're deductible expenses. So you can write them off against the gross proceeds from the sale of the NFT. Now, what's really important here is the creator, you yourself, cannot deduct the cost of your time, and you can't impute it either. So if you, for example, if you spend 40 hours creating a piece of digital art that's going to be an NFT, you can't say, well, 40 hours times, let's say my hourly rate is $25. You can't deduct that cost. Your time is not deductible expense when you're talking about a sole proprietor that's creating NFTs. You can deduct other costs that you actually pay cash for out of pocket. So if you pay cash for software, if you pay cash to another video editor and then had them assist you, or another designer, that's a deductible expense, but your time is not. So ultimately, whatever the net income or loss is on Schedule C flows through to your Form 1040, and then you pay federal and state taxes on that income, depending on your residency, and then you'll also be subject to self-employment tax. So now what about taxes for buyers and sellers? So these aren't the creators. This is somebody that buys it on some available website and then resells it. So the IRS is going to look at NFTs as the sale of property. So when you sell property, you're looking at two issues here, right? Is it short-term or long-term capital gains? And that's going to depend upon your holding period. So how long have you held the NFT as an investment before you sold it? Now, most taxpayers, they're just going to simply report this on their Form 8949 and the Schedule D, and then ultimately all of it flows through to Form 1040. You're looking at short-term or long-term capital gain or loss. Short-term capital gains subject to your ordinary income tax rate, depending on whatever your marginal rate is. So if you're a high income taxpayer, you'll pay a little more. If you're low income, you might pay less. Now, long-term capital gains rates for taxpayers is capped at 20. But if you're a high-income earner, you might pay the additional 3.8% in NIT, which is the net investment income tax. Now, here's where it gets a little unique with NFTs. NFTs are a piece of digital art, right? And so it's very likely that the IRS is going to look at these as collectibles. Now, collectibles are unique because under IRC Section 408, this is the specific code section, the sale of any type of work of art is going to be, quote, collectible, and collectibles are subject to higher tax rates for certain taxpayers. So the collectible tax rules come into play, for example, if you have a single taxpayer, so that means he's non-married, he or she is not married, and they have over $441,500 in taxable income for that 2020 tax year. So if you're in that boat, you're not going to be able to leverage this preferable 20% long-term capital gains rate. Collectibles are going to be taxed at a 28% tax rate. Okay? And then the taxpayer is also going to have to be subject to that 3.8% NIT for an overall effective rate of 31.8. So just to look at a couple of examples here, let's flip over to an example tax return for a single taxpayer that falls into this bucket. Okay, so here we have an example of a Form 1040 for John S. Taxpayer. He's our single filing taxpayer that's going to find himself in the with this collectible tax issue. So this is the page 1 of John's Form 1040. If we look here, his wages are $500,000. So he's, whatever. He might be a doctor or something, investment banker. He's making a decent living, very good living. So because he falls beyond that threshold, the $440,000 threshold for the collectible issue, he's going to be subject to that preferential, or not preferential to him, but that increased tax rate on the sale of NFTs. So I'm going to flip down really quick here to Form 8949, and this is where John reported the sale of his NFT. So here we have, in the long-term section, John has indicated that he has a long-term transaction not reported on 1099-B, and that's very likely, right? Because the sale of these NFTs are on exchanges where there is no 1099 reporting, at least not yet. That might change in the future. But he has sale of NFT here. He bought it May 1st, 2019. He sold it over a year later, June 15th, 2020. So based on the holding period, he's got that long-term capital gain treatment. Now, like a lot of these NFTs, he only paid $150 for it, but he sold it for $6,000. Huge return on investment. But what we've seen out there in the public is some of these returns can be even greater. Now, in the code section for the type of sale, code section C in box F indicates that it's the sale of a collectible. And then here he has his gain and loss. Now, here's where it gets a little tricky. So if we go back up to Schedule D, generally, what you're going to see is long-term capital gains or loss. Everything's reported here, and then it's subject to those long-term capital gain or loss, the tax rate. So the 20% tax rate for long-term capital gains plus 3.8. However, if we look at page 2 of Schedule D in Part 3, this is where it asks us to be more precise about the types of capital gains. And on here, we've indicated that, look, we're required to complete the 28% gain worksheet because he has collectible gain or loss, which is subject to this 28% rate. So the amount of gain that he incurred on the sale of the collectible, $5,850, that's the amount that's going to be subject to this 28% rate difference, whereas the remainder, the remaining $4,000, which he had just from the sale of other kind of assets, isn't going to be subject to that 28% rate. So ultimately, everything is reported on page 1 here of the 1040, right? So we have his total capital gain or loss, $9,850, which comprised of the sale of the NFT, and then he also had the sale of some business assets, which was reported elsewhere in the return, but it's beyond the scope of this video. But the idea is everything gets reported, but if you're a high-income taxpayer and you sold some NFTs, you're going to be maybe subjected to that larger collectible capital gains tax rate than the preferential 20% long-term rate plus that 3.8% NIT. And so I think if we also flip down here the 8960, the net investment income tax, you could see here that John's total capital gain or loss of 9850 is subject to the NIT, right? So he's paying that additional 3.8% on everything. So that's the sale of his other assets, and then plus the 5,850 that he sold on the NFT there. So so that hopefully that was helpful. If you have any questions, please leave me a comment below. Happy to answer those, and I look forward to seeing you again soon. Thank you.